today I'm not going to keep you for too long. What I'm going to talk about is trading breakouts, because here are some of the juiciest trades you can make. Here's also where you can get wrecked or you can get trapped. With our recent refinements, we are going to avoid that. We're going to avoid the wreckage and we're going to avoid the trap because we're going to stay adaptable. What do we need to prepare for a breakout? We need to have a general context of the market, and we're going to use the DXY for that. And then we're going to look at the levels for Bitcoin and Ethereum and have the trend lines and the levels prepared for that. Let me see if I can get, no, I'm not gonna, my charts are a little bit mixed up because I had to switch over to my laptop on Thursday, and I haven't switched back since on Roy's computer because we didn't have any sessions. And this morning I'm just trying to get everything ready as soon as possible. But I've already posted the levels clearly on the chat so that you have a super clear outlook. Okay, so I'm going to start with the DXY, and the DXY on the 4 hour is below the midline. Now, what do we know about the DXY is, if it is below the midline, the bottom line is the next target. If the DXY continues to dump till the bottom line on the Bollinger on the 4 hour, that means there's going to be a 4 hour pump coming for Bitcoin and Ethereum. And by the looks of it, this is where we're heading. Now, it doesn't necessarily mean that we're gonna keep pumping from that level onwards. From that level onwards, we will have to change to the bigger daily time frame. So what we're gonna see is this drop will take us to the 20, the midline of the Bollinger on the daily. Now, if the midline of the Bollinger on the daily is being kept, that red line here, another lift up is possible. Now, if the DXY pumps, the coins drop. If the DXY drops, the coin pump. So if we break this midline here on the daily, on the DXY, the next step is the bottom line. It rarely comes back like it did here without touching the bottom line. It rarely does that. If we're back testing, every time it crosses the midline, it comes down to the bottom. There are very, very few cases, very rare cases. If we're taking, let's say, I don't know, the December, okay, we're starting from here. There are very few cases where it retraces up, and that's probably because it was caught by a Bollinger bottom line. So the 4 hour is the first red flag that we get for any particular movement, any particular big move, and then that move will have to carry on to the daily chart. The 4 hour stochastic on the DXY has turned down. The regular RSI, let me just change this, can't really see the line as is. I'm going to make it red. The regular RSI has crossed the midline, and again, once it crosses the midline, it has the tendency to come down. There is generally some sideways along the midline, but if it stays below the midline, it's going to come down. The main idea of a breakout, as we are right now, in the stages that we are right now for both Bitcoin and Ethereum, is that there are very few people that can tell which direction this is going to go to. So it's the middle of the middle. So what we can do at the moment is check the levels and keep an eye on how the general market is doing. When we go one way, for instance, let's say you're going to go long, you think this is gonna go long. If you believe this Bitcoin's gonna go long, then you need to keep an eye on the DXY on the 4 hour to keep dropping. If you see any sort of resistance, like it was here, for instance, for 4 hour leveling out, for four 4 hour candles leveling out, take your gains and come out. Keep an eye on the general context, because the situation right now is quite volatile considering the fundamentals that are going on economically. So today, and again, Mondays are famous for fake moves. So today we might see a rehabilitation to the upside for Bitcoin and Ethereum. We might see a test on the top line of the structures that we're in today, and then a drop tomorrow, continuing into Wednesday and Thursday. That's again, this is my personal interpretation, and I will show you why I believe it's the breakout will be to the downside. I will trade this up if I see my signals triggering up, and I'll tell you what they are, of course. But I believe that we're going to have a fake out move to the upside today, and a continuation to the downside to the next level for Bitcoin and Ethereum. Next level down. Now, so just to summarize what the DXY is doing, we might see a drop to the bottom of the Bollinger on the 4-hour, and then we need to keep an eye on how the day is going to close for the DXY. And we need to see if we're going to keep the 20, MA, the midline of the Bollinger, because that will signal a lift up. And if we break the midline, that will mean continuation to the downside, which would trigger a breakout to the upside for Ethereum and Bitcoin. Now, here's where we are. I'm going to start with Bitcoin because it has clearer levels. Ethereum has clear levels too, but Ethereum has an extra step that it's done on the way up and on the way down. Bitcoin's easier and faster to explain. Here is the triangle that we've been in since August. A lot of people consider this the whole range, and again, that might be it. From June, we've been in this triangle. If I'm gonna take this target and put it here, my first level would be 26,000. If I'm gonna take the bigger target here, the June entry in the triangle, my level will be this one, 31K. 33 would be the target, but the support and resistance is at 31. This would be the target upwards. If I am to take the breakout downwards, the first level will be 14.5. Though realistically, the next level of support and resistance is around here. It's the 13K level. It would also, the bigger target of this triangle would bring it down to 11,000 as well. So these would be the two levels to break out towards. I'm gonna leave with it. I'm gonna leave it like that with the intermediary levels. The reason being is it won't go to 31K straight away. It'll take days for that to happen. Now, it might not take more than 3-4 days, so we need to be quite on the ball with this. I'm gonna just adjust the EMA because it's white. I'm gonna make it red for this. Okay. So what we've managed to do with this sideways over the past 3 days is get very close to the 20 EMA on the daily. So here it is. Here is the trend line that it needs to break, which is about 19,600, and here's the bottom line that it needs to break to move down. Now, how do we trade a breakout? A breakout will have an initial candle that will push up quite forcefully. So there will be something along these lines. Massive lift. Then there will be a back test. Then there will be another lift, and then again zigzag up to 31K. And I'm going to demonstrate the lift scenario first. There are two possibilities to trade this. So you can either take a position to the bottom line here. If you think it will go long, you can take a position on the bottom line here and pull your stop loss below the previous low. And in this case, it would be a very advantageous stop loss because it is about 4% here. 40% if you're 10xing, but this would be the lift that we're talking about. From here up to here, the first level would be 36%. So we're talking about a 10-to-1 risk-reward ratio, which is more than ideal for a trader. A trader generally looks for a 2-to-1 risk-reward ratio on the regular swings, but this would be super. So it's worth risking 40% of the position for something like this. It is worth, especially since you're going to be watching it, so you're not just putting the trade in. So you see it coming up, and once you see it breaking in, you don't even have to wait for your stop loss to get triggered. The stop loss is there if, for instance, this backfires and you're asleep. That's why the stop loss is there. But while you're watching this breakout happen, you know that if it breaks out of this triangle and comes back in, chances are it's going to come down. So that would be the making of a fake out. So the stop loss is there to protect your position in case you're not watching it, or in case you're sleeping and again not watching it. That's how I would use the stop loss if I am to take a position on this bottom line. I won't take a position on this bottom line personally. I will take a position at this retest. So what I'm doing right now is I'm waiting for this to show itself, and I'm waiting for this to backtest. So that means today, tomorrow, I won't be in any trade. I will just be watching to see what's happening. If we close today on the 20 EMA on the daily, again, that changes the narrative. We've had a MACD crossing upwards here. We've had a stochastic crossing upwards here. So this narrative will be supported by these oscillators as well. And I will be looking to see it break upwards and then backtest. This backtest needs to hold. And then I'm going in and I'm putting the stop loss right underneath the backtest low. So depending on where the backtest is, for instance, if it backtests here, I'm going to enter here and I'm going to put my stop loss right here, because I know that if this is not going to go up, it's going to collapse downwards, and that backtest and that stop loss will be preventing, and it will be quite a tight stop loss. I wouldn't go for anything higher than 15% on the backtest. So because again, it's a tighter space to watch this in. So this is what I'll be doing when it comes to this breakout. At the moment, I am looking to. I am in a long on Bitcoin. It's the long that I've been in, but I'm looking to take profit at 19,700, somewhere around here, because I believe that this is going to push up. But that's irrelevant. That's just a small trade that I'm in at the moment, and I'm just keeping it for today to see where this is going. That's not where my focus is as a trader at the moment. At the moment, I'm just watching for this breakout to happen. This would be the big trade that I would be watching to get into. Now, I have explained the upward scenario. I'll explain now the downward scenario. For the downward scenario, I'm waiting for the 18K to break. So somewhere around here, it will break. It will make a very dramatic drop. It'll come up and back test the line, and then it will start heading down. And I'll do the same thing. I'm gonna watch for this back test here and see what this is gonna do, and then I'm gonna enter here with a very tight stop loss above this line. So that's what I'm looking to do. Personally, I believe this is gonna head down, and my reason for that would be what's happening on the weekly stochastic momentum, which is heading down. This doesn't head down too often. I would love to see it once I believe we have a couple of days under our belt of upwards move. Maybe we're gonna start moving the weekly momentum upwards as well on the stochastic. The MACD is heading up, so again, it's very contradictory information. But again, we've had this topping out formation on the stochastic, and that doesn't happen very frequently. I don't see it happening very frequently, so I expected this to have some sort of consequences. But I am watching for the levels to show themselves, and whichever way this is going, I'm going to follow it. So this is, and I'm not going to follow it instantly as it breaks the line. I'm going to follow it on retest. If I missed the breakout, so be it. If I'm not there to see the retest, and if I'm not there to I don't know, to go in a trade, even though what we need to do here is, for instance, if I'm gonna go to bed and this has broken the line, I'm gonna put a trade here with a tight stop loss above. So I'm gonna put a trade in a limit order while I'm asleep, just to make sure I catch that retest as it happens. So I'm gonna put a trade here with a tight stop loss above the previous peak. Let's say this is where it is. So I know that if it breaks the previous peak, this is it. Again, that stop loss will be, because I'm not watching it, it will be a little bit deeper. It would be about a 40% stop loss. Is it worth doing a 40% stop loss in this case? Yes, absolutely, because again, we're talking about a big risk-reward ratio. It would be a 20% drop towards the 14K, even deeper towards the 13.3. About 30% of a move. It could, again, I cannot stress this enough. I don't have a crystal ball, and to be honest, both situations look equally valid to me from a technical perspective. Descending triangles like this have a tendency to break downwards. These are my two reasons why I believe this is going to break downwards: the pattern, the descending triangle, and also the weekly stochastic momentum. So to me, these two reasons would be enough to break downwards. I have reasons to break upwards too, and that would be the daily stochastic and the way the MACD has crossed up. I'm not even looking at the smaller time frame indicators, because at the moment it's all mumbo jumbo in this tight space. So we need to see something happening. We need to see something serious happening before we let the smaller time frames, and by smaller I mean the 4 hour, tell us a direction. The daily right now is the one leading this move, and the daily levels, the trend lines, and the daily EMAs will tell us where this is going. So that's the short story now. Watch for 19,600, watch for 18K. If these two break, watch for the retest, put a stop loss on it, and follow it either way. Okay, that is Bitcoin. Ethereum is in a similar situation. So Ethereum has a different pattern. Again, it has a stochastic momentum on the daily going up. But if I am to change on, why is it on? I can't change to the weekly at the moment. Come on. Let me see if I refresh the page. Will it let me do it? Ah, yes, finally. Okay. So if we change to the weekly stochastic momentum, we have a similar situation here. It's not looking great, and it's heading down. And when this is heading down, it's not if we're looking at the previous turns, what happened was a very dramatic drop, and here we're looking at what might be another very dramatic drop. Again, on the daily, we might see a slight lift today. if we're thinking in terms of how the market makers are thinking about this, what they need in order to sell massively is for someone to buy. You can't sell if nobody's buying. So they need to create some momentum for people to buy in. And by, again, it's not only people, it's other market makers buying in. So we need to see a lift to create some buying momentum for a massive spill to happen. The way it happened here, the way it happened here, and here it's been sideways with a sell and then a lift, but this was the CPI day, was a bit hectic, too hectic for me to read too much into it. But here's the structure that we're in. Ethereum's not so clear as Bitcoin because this is Ethereum's triangle. Like you've seen how tight Bitcoin's was, and it had a lot of touches to the top and touches to the bottom. So a nice, strong, very strong structure on either side. Whereas Ethereum is not so strong because, well, it is and it isn't, because it has also a midline. It has an intermediary level here. It's the level that we generally look at on the 1 hour. Because of this whole lift, this was a 140% pump. Because of this whole lift, this was this midline appeared here. Anyways, I'll keep the story short and clear for you guys to be able to follow it. There are two main levels for us to watch for. The first one is the 1230 level. So if this 1230 level breaks, we're looking for a drop down to the 1000. I don't think there's any escaping that, to be honest. If the 1330 breaks, then we're looking to move up to 1490, 1500, up about here, which is this divergence line. And this divergence line is the one that will tell us if we're breaking out on the daily towards the 2 grand mark. As you can see, there's quite a ride to that. Bitcoin's really close to it. Ethereum is 13% away from it. I'm not saying it can't reach it. Absolutely it can, no doubt about that. However, what we need for that to happen is a lot of support and a lot of lift and a lot of buying momentum. So we have yet to see what that's going to happen. Now, what that leads to is a first breakout. So Ethereum would have two breakout levels. The first one would be the 1500 and the second one would be the 2000. I know it's 1900 here, but there's another line right about here, which is the 2000 or 2100, right about here. This is where this accumulation could take us. But it will take us there step by step. First, we need to see the 1500 being reached. Here is the structure. I left out a lot of the a lot of the CPI pump and dump, dump and pump, whatever, that happened last week because it was quite artificial and fast. And this is the accumulation structure that we're in. So these would be the two levels to be watching for. And similarly, let me just refresh this. Similarly to Bitcoin's breakout strategy, I'm going to do the same for Ethereum and reinforce the strategy structure. So strategy structure, yes, the breakout strategy structure. So there are two possible ways to trade a breakout. You can either take, for instance, if you think this is gonna come down, you can take a position right about here on this line with a tight stop loss above the previous high here, though it is quite a bit of percentages because it is a descending. yeah, it's about 40. Yeah, it's the same as for Bitcoin, about 40 something percent. But again, I cannot stress how important it is to trade a breakout with stop losses. I used to trade breakouts by placing trades either way, hedging, so putting a trade here, putting a trade here, stop loss, stop loss. When breakouts happen, they go so fast, you do not have the time to act. On XRP, one of my breakouts met its target in literally 2 15-minute candles, and it was a pump of 12%. While the other trade that I had in was stop lossed out at 40%. If I hadn't put a stop loss in for that trade, I wouldn't even have had the time to log out, or log in and do the whole technical thing of managing the trade. I would have been just liquidated. So instead of just I made 140%, lost 40%. Overall, I made 1x. I could have lost the 100% on one trade and made only 40%. So I think you know what I mean. Breakouts are very easy liquidation situations. So put a stop loss in wherever you are and however sure you think your position is, because nothing is sure when a breakout happens. There are traders who avoid trading breakouts specifically for this reason. They would be waiting for the breakout to pass, and then they'd be trading this ranging swing action, which is also a great strategy. That's why I'm very calm when it comes to these particular breakouts, because I'm waiting for price action to show itself. If it's going to backtest and I get to catch the backtest, and I'm looking at the backtest and I see my RSIs going in the right direction or being in the right position for me to go into a trade, I will do it. If I have any doubt about it, I won't, because it's not worth it. It could be better to just wait for the whole thing to settle and then trade what's there. Trade that beautiful range. So again, you could take a position back to I don't want to waffle back to here. So you could trade, you could put a position somewhere around here for a long, put a stop loss below the previous low, but you see this is what the CPI pump and dump created. This would be a very, very deep stop loss. Personally, I would put my stop, I wouldn't risk that much. I would put it right here. I know technically this could be it. I'd rather be stopped out here, watch it and see what happens. Or if I have any doubts because of the local anatomy here, I will just stay out. I will just stay out until this breaks out of here, consolidates back here, and then goes up. So tight stop loss for the long, and that would be, let's say price action comes down here and then back here, consolidates here, and then starts heading up. So this is the first position for the long. This is the second position for the long, the back test. Don't want to be too teacher sounding today. It's just that I was caught initially when I started trading. Breakouts would be the ones that would wipe all of my gains, and I'm not even exaggerating. I had a week. I remember I had a week where I made 3x trading up and down, and I had one breakout that wiped. It was to the downside. I tried to catch. I thought it was a fake out, and I tried to catch it to go up, and it wiped all of my 3x's, everything, because I over margined. You know, like after a week of trading excellently, your confidence levels are through the roof, especially as a beginner, and you put everything in, and then you're wiped out. And I was like, oh, very frustrating. So that's why I am. I couldn't be any clearer in saying, if you're not sure, let this pass, watch it, map it, stay with it, but let it pass as a trade and let it settle the space for you to trade up and down, because it could be very dramatic, not for the faint-hearted when it comes to movement. But of course, if you are level-headed and you have your strategy in place and you put your stop loss with every trade, you could risk 6%, 7% with every trade to jump in on a 40 or 50% lift or drop that would give you a lot of profits, which is what I'm planning to do as long as I'm watching it. So I wanna watch this back test. I will not be taking one of these positions. I will be taking one of these positions, one of the confirmation positions, and I think Roy talked about going in on confirmation too. Now the same for the down. It will move down forcefully. It will come up, and then it's gonna come down. Now, what do I wanna? I have an idea here that I wanna tell you about, and that idea is connected to this, not back testing this line in particular. So the back test could be somewhere along, let's say, this line. The line as the breakout happens might change slightly, and we have to move to a 1 hour. No, the 1 hour MAs are terrible to look at right now. Let me go to the 4 hour. Okay. So you see on the 4 hour, it's trying to break the it's resting on the 20, it's resting on the 50. It's probably going to come up to meet the 200, which would be another touch to the top here. Now, this could break the 1250 line here, and in pushing down, it could have a 20 or a 50 MA on the 4 hour following it. So the back test, as neat as this trend line is, the back test could be the back test of an MA, not necessarily this line here. And again, this is something that comes with experience. You will make you will see the natural back test as per the local circumstances. Now because we are outside of a breakout, the breakout hasn't happened. I'm just showing you the breakout with a back test to the line, which is the simple back test. But you could have a 20 EMA dropping down or a 55 EMA dropping down as the price action moves down if the breakout is to the downside, and the back test could happen somewhere around here, let's say, not necessarily here, because this 20, let me put a noodle. So this 20 could start spilling down and get up to here, and price action, instead of going back up to this line, it could back test to here, and so back test to the local EMA and start heading down. That is also another variable where the mind can get wrecked in the breakout, because you're waiting for this back test and it doesn't happen because it's only back testing the EMA. And that can happen too. And this is one of the intricacies of trading breakouts. It's one of the toughest skills to get as a trader. I'm still working on it myself, because the variables are constantly getting to me. My way around it, as a very conservative trader in terms of position, that's my trading strategy. I'm very conservative with my position sizes, so I don't go in big. I would be here, I would be putting in half of my position, saving for this, for a higher I would still be putting a stop loss here above the trend line, but I'd only be putting half of my position here. I would be saving the other half of my position for either here, or if I see it breaking this bottom here, I would put it in on the downside. And yes, that will pull my entry point. It wouldn't be advantageous to the entry point, but we're talking about breakout ranges now that are huge in percentages. So losing a little bit of the breakout entry point doesn't really matter, considering the risk that you're taking and how how putting half of my position allows me to be more adaptable. So it allows me to get in on the trade and continue going down with the trade, or if it decides to move up and backtest this, add more there, keeping the same stop loss here, but that stop loss, that full percentage of the stop loss, only goes in when I put in my full position. So that's my way around. The advantage of this strategy going in, building up my position, is that I can stay very adaptable. I can stay very adaptable, and I can add either on the way up or on the way down. The disadvantage is if this backtest doesn't happen to the trend line, I'm in order to make the profits, because I can't just continue the trade with only half of the position. It wouldn't be like it wouldn't be advantageous. I could technically, but it wouldn't be advantageous. Like, that half of the position needs to get in, because I've risked plenty by coming in here with this stop loss. I would be losing here, and so I would be losing a part of the profit. But I'm willing to do that. That's my workaround as a trader. Some other traders choose to wait, skip other strategies, but that's my workaround. My workaround is building up positions in breakouts, and that's what we talked about doing last week as well. When we thought we were going to have a breakout last week, but we didn't. We just expanded this range a little bit. That's it from me. I'm pretty sure I'll be here in the same place tomorrow, telling you the same thing, because I don't think the breakout will happen today. I think today we're going to see the counter move. I'll be online the whole day today, and I'll post any updates if I see any major moves happening along this line and along this line. And if I see any, of course, the most valuable word here is the backtest. If I see any backtest, if I see a breakout and a backtest, I will let you guys know. And if I start a position, a breakout position, I will let you know. Again, I am in a small long on Bitcoin. It's the long that I started. I started the long somewhere around here. I took my profits here. I DCA'd in here. I didn't take any profits, so I'm at my entry point right now, and I'm waiting for it to get to 19.7 here, and I'll be taking my full profits when it gets to 19.7, and then staying out to see what's going to happen. That's my strategy. But this long is not the long-term long. It's not the breakout long. It's just a tiny long. I thought this was going to be the long to do for the breakout, but it's not. It's been way overcooked for that to be it. So I've yet to. I will close this position, because this has nothing to do with the breakout. Just to be super clear where I stand on this. I haven't yet started a breakout position. I will start on retest or the retest of an MA as they happen.